All right, thanks so much for sticking around. So I'm a professor in the finance department here at Stern. And in this session, we are going to hear from two fintech startups. First, from a startup that provides online mortgages, and second, from a startup that helps people manage their spending. And then third, we're going to hear about what may be an important platform for entrepreneurs with blockchain-based ideas to launch their businesses quickly. So we're going to start with Vishal Garg, who is the CEO and founder of Better Mortgage. I don't know if you still call it that. And the way the session will work is each speaker is going to speak for 15 minutes, and then we'll have a few minutes for questions from you. So let's get started with Vishal.
Thanks, Sabrina. Hi, everyone. Thank you for having me. Really awesome to be here. I think I was in this room like 19 years ago for a chunk of my life. So terrific to be back and showcase sort of to the Stern community some of the things I've been working on since I left this college. So with that, I'll talk to you a little bit about Better Mortgage and what we're doing. So one, Better Mortgage is here to make homeownership more affordable, more accessible, more delightful, and just plain better for all Americans. And the way we're doing that, we're taking sort of US residential real estate, which is this very large asset class, $29 trillion asset class with the US mortgage market, $15 trillion, one of the largest financial asset classes in the world with an annual demand of $2 trillion and making it substantially superior. So sort of what online stock trading, Charles Schwab E-Trade, did for enabling consumers to better access the equities market, we hope to make better for the mortgage market, which basically today, there are 6,000 mortgage banks around the country. They all employ retail commissioned loan officers that get paid 1% in, 1% out. The process takes 60 days and ends up costing consumers something like $8,000 per loan that they make. I would say that the bulk of it is still done via phone and fax. So it's sort of like the securities business circa 1971, and we're trying to make it substantially superior. A couple of the things that are in the background, like most consumers don't know it, but it costs almost that 800-page document that is your mortgage. It almost costs something like $7,200 to make. More if you're like a big regulated bank like Citi, Chase, or Wells, it might cost like $15,000 to make. If you're a smaller company, it might be a little bit less. And that ends up costing consumers a huge amount in terms of transaction costs. Actually, real estate transaction costs are the highest in America of any developed economy, almost like 10% to come in and out. So today, if you want to buy $500,000, in the old days, if you wanted to buy $500,000 of IBM stock, it would cost you 1% in, 1% out. It's almost like $10,000 before they deregulated commissions. Charles Schwab and E-Trade and others came around. Today, that costs you $10. So you've had a factor of almost 1,000x compression in costs for accessing the equities market. And in mortgages today, in real estate today, to sell a $500,000 apartment, between the cost of getting in and out, it still costs you something like $50,000. It's crazy. And while every apartment's sort of different, people used to say that a lot about like every stock being different. And while and if you can sort of start to distill things down at an attribute level, there's a lot that technology can do to make this much, much better. Why does this matter? Because if you actually, if you're in college today, or if you're a young person today, you don't even think about home ownership. But the fact of the matter is, as millennials start to age, they start to think about it, right? You have household formation, people get married, they have kids, they do the things that humans have been doing for a long time. And at that point in time, they want to own a home. And most of them can't. Unlike prior generations, where you would typically start your path to home ownership in your early 30s or mid 30s, today that's being deferred out by 10, 15 years, partially because consumers have large student loans. They're spending their time paying their student loans off rather than saving for a down payment. But a lot of it is because of those transaction costs that make mortgages much, much, much more expensive and make it difficult for consumers. That being said, across the ages, if you typically own a home, it has been the vessel for socioeconomic mobility. It's the mechanism by which people can use to build personal wealth. 70% of consumers' wealth is in the value of their homes, and use it for emergencies, use it to pay for sending your kids to college, use it to pay for retirement. So the current state of the largest sort of tangible asset class in the world is just really simply unacceptable, and we set about to change it. Started for me personally, I actually went through a process of trying to buy a home about three and a half years ago, and I was surprised. I thought like, oh my God, this should be so easy. I'm gonna find an apartment. I thought that was gonna be the hardest thing. And when the broker said, hey, are you gonna finance? I was like, yeah, sure, I'm gonna definitely finance. Rates are so low. This only works if, otherwise I can rent the place. So I'm gonna go and finance. And, having grown up in the 90s, I was like, oh, I'm gonna go on lendingtree.com. And when banks compete, you win. And I'm gonna go there and I'm gonna get approved for this house and it's all done. Right? Like one day, like I can order Chinese food in 5 minutes, so why can't I get a mortgage, on a house? Like it's totally makes sense. And what I was in for was this massively rude awakening where literally my phone blew up. Like it was like acne for my iPhone, right? Where people kept calling me over and over again the next day and the day after. And it was interesting, like somebody did a study, average, if you put your phone number on the internet to apply for a mortgage, you will be called 53 times over the course of the next 5 days and sent all of these emails. And a lot of it's literally like boiler room operator type folks calling you incessantly over and over and over again to sell you a mortgage. And whether it's from Quicken or Loan Depot or any of the sort of the companies that claim to be sort of digital or from a traditional bank, that is how people perceive mortgages to be sold. But no, homes are actually bought. And so I said, there's got to be a better process. There's got to be a better way. What do I want? I want to be able to walk into a house, pull up my phone, have it geolocate, value that property, type in a few pieces of data, and have it approve me for a mortgage. I want to be able to send that offer to the guy selling me the house or the gal selling me the house, right? And basically, they thumbprint, yeah, we're good to go, and then we close via retina scan. That's the world I want to live in. And along the way, I realized like the best companies. It's like when you have this idea of like you want to when you're making the world you want to live in, that is so powerful. So started that. I was at that time managing about $6.5 billion in a hedge fund, trading mortgages and trading student loans. I said I got to stop doing this and really rather than like working for a bunch of rich people, helping them sort of get richer, I'm going to go and help the average homeowner access housing. And it's core basic human need in the way that I want to access housing and go and do that. So that's what I started to do. We hired a great team. We hired the former head of recommendations and machine learning at Spotify and brought a whole bunch of great engineers in who understand sort of matching algorithms. And what we've built is, we believe today, to be the best way for any consumer in any of the markets that we operate in, we're in about 15 states, to go and get a mortgage. So with that, I want to tee up sort of what we've actually built, and then I'll talk a little bit about how that's what we've built is powerful. So this is your traditional process. We have a video, so it's hard because can we pull the video up? There we go. Okay, great. So so here what we have is this is a demo. This is actually we're going to have. So it's very hard with mortgages to kind of figure it out because we literally want to play a demo of us going through the site. You go land into a page. What is your journey? Like where are you refinancing your house? Are you buying a house? You type in a few pieces of data about yourself. Where do you live today? Or the property that sort of you're looking to finance. Type in again, this is going at like 1x speed. It's a little too slow. You type in a few pieces of data, and we're going to time this. But basically, in under 5 minutes, you'll be able to get approved for a mortgage, which is sort of pretty radical when the traditional process for a mortgage approval today takes something in the order of 25 to 35 days, and the entire process takes 60 days. So we're going to do a soft cred check. I think this is the version of the demo where my social security number is fake, but we're all part of one family here at Stern. Yeah. OK, they fudged it out. Cool. So basically, there you go. Boom. Like, so I made the cut. So you see sort of like application design, like, we're trying to get along the way, we're trying to give and get. So traditional mortgage process is you like fill out this form called the 1003, which is a federally mandated form. It's like 8 pages with like 100 pages of appendices. And you have to fill out the whole form before they'll even actually start processing it. And what we've done is started to take only the most relevant pieces of it and have the consumer do it. And every time you try to do it, we've built a rules engine so it comes back and asks you the next most relevant question. It doesn't ask you questions that are not relevant to the things that you care about. So it starts with a rules engine right from the beginning and then tees you up to kind of enable you to be getting effectively value. Sort of you give us a piece of data, we ideally give you something back in value. You give us a piece of data, ideally we give you something back in value that starts to push you down the process. OK. So here it's asking you, like, we will typically take the data that you have about the address you entered. We look at about 1.6 billion property transactions that we have in our data set, and we try to find which one you already have, so you never have to enter in the details about your mortgage, because most people, for those of you who own a home, typically don't remember most things about the mortgage that you got. Usually it might be 3 years, 5 years, 7 years ago. But sometimes we don't find it. So here in this case, if we didn't find it, it sort of finds you that. But here it'll ask you if you want to take additional cash out. It'll tell you how much cash you can take out. So right there at the bottom, like, if you want to pay off other debts and things like that, it'll tell you that. Now, while this seems long, we are only still 2-3 minutes in. But basically here, what we're doing is we've built this matching engine that takes 21 large institutional investors, about 70% of the entire market for mortgages, which is several $1 trillion in size. We've got about 700 billion of demand on our platform, and it's basically verifying all these attributes about myself that I've entered in, matching it with the end investor, and approving me. So it's been about 4 minutes, and we're approved here for a loan that's several $100,000 in size. There we go. And now I can pick across the board any rate across a range of products that I might want to pick and choose. I can slider things, which traditionally doesn't exist. So traditionally, if you wanted to change the rate or the product or anything else that you might want to pick about your mortgage, you'd have to call the loan officer or the loan mortgage broker back and then ask them for a quote for that other product. We'd basically make that completely transparent to the consumer. And then basically the consumer can, from there, start to pick the product, pick that, they're mapped to an investor, and go forward. And then they go in and they do the rest of the mortgage. With that, let's cut out the demo and maybe go back to the deck. How much more time do I have? OK, great. So if you go to the next page, basically what's happening at the back end is we've built a rules engine that goes out to Fannie Mae, 6 of the 7 largest banks in the country, as well as a host of other mortgage investors, gets all the rules that they want for mortgages that they want to fund that day. So it's about $1.2 trillion of annualized demand, almost like 40 billion a day of demand for financing mortgages in the system, and effectively exposes consumers, therefore, to the best range of products available to them. So if you go to Wells Fargo alone, if you're let's say a Wells Fargo customer, you're better off going to better.com to even get a Wells Fargo mortgage, because not only can you get approved at Wells Fargo, you'll get approved with any of these other investors that are out there, including others that Wells Fargo might not fund. You get sort of algorithmically matched between consumer, property, and investors. The traditional problems with compliance, as you know, with the credit crisis was caused by bad mortgages. That's sort of at the core. Bad mortgages repackaged into mortgage-backed securities, repackaged back into CDOs, and with CDS issued against them. And here, right at the beginning, all of it is totally compliant. All the rules are hard-coded into the system. It allows us to create what we believe to be sort of the Amazon of this market, where it's front to back. You have the largest product, the largest range of products, the largest grouping of sellers, investors, and it's instant, it's online, and a much, much, much lower cost. We've done over 800 million of mortgages since we launched 20 months ago. We're the fastest growing fintech out there, period. Far better, far faster, to give you some context. Other companies like Lending Club, Prosper, and others that took years to kind of get to that level. We have this unique product offering where we have a better process, a better product, and a better price all the time, which we guarantee. Because of leveraging finance and technology, it's uniquely possible in New York because you can get sort of the best mortgage traders and the technologists that build large-scale order execution platforms, matching platforms, and put them all in the same room together, side by side, to build this platform out. The most important thing is our customers are super happy. We have the kind of, what they call net promoter score that companies like Apple and Disney do, not sort of the negative ones that most like our competitors do. Just wrapping it. We've got a great team. Our largest investors are Kleiner Perkins and Goldman Sachs. We've raised about $55 million of capital, and we've continued to build out the business. Our goal overall is to be the hub of home ownership. Most companies in the mortgage space have traditionally thought of themselves as providing a financial product for a consumer need at a time. We're trying to redefine the consumer need. The consumer's need is to buy the best house they can afford. And if we can empower them with information that lets them do that, then we can truly make home ownership better for all Americans. That's it.
Thank you.
Oh, sorry.
All right. Do we have any questions from the audience for Vishal? Yes, there. Lady in the black shirt? Yep.
I'm also an NYU Stern alumni.
Hi.
I have a question. I'm coming from Europe, actually, which is where I've lived for the past 25 years. And my question is, what competitors do you have in Europe? Do you know? And if not, or even if so, are you coming to the rest of the world? It seems extremely successful.
Right now, we don't have any companies like us in Europe. In markets in like the UK or in Germany, there are similar systems to the United States in terms of a secondary market for mortgages, a government entity. Like in Germany, there's the Pfandbrief, which is sort of very similar to like the US Fannie Mae, Freddie Mac sort of securities. We currently don't have any plans, but our goal is once we are able to make homeownership better for all Americans, we do want to do it for everyone else also. But there's a lot of room for others to step in and help consumers in the meantime, and we would applaud that.
All right, on this side?
Hi, I come from here. And how do you get faster approval from the banks than the banks get, for me?
The way it works is that we've taken the rules that the banks, so it's like sort of there's the average mortgage broker is 67 years old, uses a fax machine to get rate sheets, looks at them, and then sort of determines things. Frequently is not really going through. So the idea of like a person, a human, actually going through a 200-page PDF each time to make sure all the rules are checked and I's are dotted and T's are crossed, that takes a long, long time. And so on average for a bank, it takes 28 people of checking and then someone else checking another person's work to come back to you with that decision. We take all of that data and we think of that PDF as simply as rules and a logic tree on a page. We take that logic, we embed it into our rules engine, we run every data field you enter into the system, parallel process it across all the banks on our platform and all the other investors on our platform. If true, then we move to the next node and we try to minimize the friction. So we try to path you in the lowest friction pathway and then come back. So what we're able to do is our machine does what it takes 28 humans otherwise to do in 30 days, our machine does in 3 minutes.
Right. We'll have time for one quick question from here.
Yes, I'm here from NYU also. I wanted to know, what's the revenue model of the company?
Typically, the banks pay us a premium for funding the loans. It's about 2%. So on average, we just try to make 2%. So if we fund a loan for $500,000, we typically we sell it to a bank for $510,000, or we sell it directly to Fannie Mae and not to a bank or to a hedge fund or somebody else like that. Frequently, we just sell the cash flow stream.
But you need a bank.
We unfortunately have to cut off there. We've run out of time.
Sure.
Thank you so much, Vishal.
Great.
All right. Now we're going to hear from Derek Brown, who is the founder and CEO of Exec.
Hey. So, show of hands, how many of you are, I'm not going to ask age, I'm going to ask how many of you would identify as a millennial? How many of you have heard of Exec before today? Good. How many of you are sick of talking about blockchain? Yeah? All right. How many of you have a higher credit score than Vishal? No, I'm just kidding. So, instead of talking about Bitcoin, blockchain, and that kind of thing, let's talk about one of the most fascinating topics within FinTech. Next slide. Well, I have the clicker, so. Nope. You've got the right one. Who am I? We established that. About the financial crisis, right? Let's talk about the financial crisis, 2007, 2008, 2009. Vishal kind of mentioned it. What the financial crisis did for that 2 to 3 year period and then the Great Recession after is it has profoundly shaped FinTech in a way that a lot of people, including this room, don't talk about. The financial crisis pointed all of our collective eyes to this set of problems of regulation, compliance, lending, credit scores, mortgages, and I'm very, very thankful that those companies tackling those problems exist. I come from one. Previously, I served as the VP of Product Development at Adipar, which is very squarely within the PWM, private wealth management, kind of compliance regulation space. Before that, I was at LinkedIn, helping the economy, right? So this space and these problems are massive problems, but by diverting all of our collective eyes to this subset of issues that exist within financial services, it has distracted a lot of the technology industry from other breeding problems. Does that make sense? Yes? Nods? One of those problems is the idea of the mass affluent, right? The 90% of people who have incomes under 100K, where they have problems investing. So Robinhood sprouted up. They have problems saving. So now you have, Stash and Digit and Albert and all of these other kind of savings apps. And that's phenomenal. How many of you use one of these apps that I just mentioned, right? Or have an account. You might not use them every day. I don't know if you saw a report that came out just this past week where consumer spending is the highest it's ever been in 8 years. People are diverting funds from their savings in order to spend, right? Instead of having a seatbelt or an airbag or a cushion for that emergency, millennials would rather have avocado toast, so famously coined by the Australian economist, right? All right, all together, I want you to say what the most popular consumer spending app has been in FinTech over the last, I don't know, let's call it 3 years. 1, 2, 3. There's not a collection. I heard it. How old are you? 22. Venmo. It's Venmo. Go look at the iTunes App Store or Android or whatever. How many of you actively use Venmo? Look around. All right, show of hands. How many think that it's 3 to 1 year old as a company? 4, 5, 6, 7 years old? That's a majority. It was founded in 2009. Seems like an overnight success, doesn't it? But it's been nearly a decade since there's been any innovation in consumer spending. And prior to that, the last really big company to do anything within consumer finance was Mint.com. They were acquired by Intuit, a company older than I am. I'm 32, by the way. I identify as a millennial. Right? They're nearly a decade old. They're 8 years old as a company. So I'm not here to talk about Venmo. I'm not here to talk about the financial crisis ultimately. But I am wanting to give some context as to what we're doing at Exec. What we're doing at Exec is not just some cool, fun millennial app, although it is, right? You can download it today from the App Store, and if you have an iOS, I would encourage you to do so. I'm not going to come up here and show you the app. I will show you some screenshots in a moment. But try it out for yourself. We've been in public beta for 7 weeks. What do? It's basically Mint.com for millennials. We've taken the same kind of digital design approach, the same kind of engaging approach that Instagram, Snapchat, Facebook, et cetera, have for relatively unimportant data sets like your friends' photos, right? Your friends' relationships. And we've applied it to an infinitely more important data set, namely that of finances. So here, when you interact with your feed, you can see your spending. You can set a budget. We're like Fitbit for finance, right? Finbit, if you will. I'm a dad of 3, excuse the jokes. We allow you to track your spending week over week. We reset every Monday. There's no guilt if you're over budget or anything like that. Monday's coming, it's fine. We allow you to select, I don't know if you can see the top kind of merchant there, but Shake Shack. You can select Shake Shack in the app, and it'll show you your entire spending, your entire relationship with that merchant over time. So you can see all of your previous transactions at Shake Shack. You can see your average spend at Shake Shack. That is, if on a Friday afternoon, I want to treat myself, I walk into Shake Shack, what can I expect to spend? We know. We can tell you up front. We can also tell you what the exec average is across all of our users. Are you spending more or less than the average user on exec? This information is just that. It's data that enables you as a consumer, you as a customer, to finally make data-driven decisions instead of habit-driven decisions that you've been making your entire life. You have the same 6, 7, 8 places that you go to lunch. You have the same 2 cocktail bars that you take a Tinder date, right? Or your husband or wife. Never mind. You cycle through these merchants. You have no idea what else exists outside of those. You've been making habit-driven decisions, right? Finally, you have data to make better spending decisions. That's what we're after. That's what we're after. But this is just the beginning. This is just the beginning. This past week for iOS, we've launched Loop, which for the first time is a social network on top of this spending data. So you can see where your friends are going. You can't quite make it out in these low-res slides, but you can see where your friends are going. These merchants, right? And we're collecting reactions, which are basically just very lightweight emoji responses to an experience that you had at a merchant. So for the first time, you can see where your friends are going. We're not sharing financial information, right? It's illegal. We can't show you like where you're spending at and things like that. What we can show you, however, is what was your experience like? So think of this like a Yelp or Foursquare or Google Places, but backed by actual transactional data. Backed by people who are actually spending at these places, not just angry over a chance encounter or something like that, right? And if you log onto the platform, you would see a ton of people sharing reactions positively. It's a very positive platform, which is pretty new to finance as well, if I may say so myself. At the top, you'll see trending merchants. So based on our data in New York, we're New York only right now. Based on our data in New York, we can show you what are the most popular merchants, what are the trending merchants. We've also partnered with fantastic affiliates like New Fork City, Devour Power, to show their picks. Budget-friendly, value, efficient spending, right? Merchants in the New York area that they think you should check out. And then at the top, obviously, there's a call to action to react to your recent transactions. And there's also notifications for how you're doing with your spending, your budgeting, et cetera. This is the Loop that launched this past week. On iOS only, New York only, we have 7,000 users in 7 weeks. New York only, iOS only. 6 million transactions on the platform, representing nearly $1 billion worth of spend. We've hit a nerve. There's something that people want here, and it's because for a decade, their needs, they want to spend, they want to have fun, but they want to do so responsibly, and they haven't had the data in order to make the right decisions. For the first time, they do. I'm also pleased to announce we're launching Android next week, right on the back of the Loop launch. But we're not done there either. Coming soon, recap. So we show you your feed in reverse chronological order before the New Year's, so we can all make our resolutions that we will inevitably break. We're going to show you new ways of seeing that spending data. By category, what are your top merchants? What if you cut out coffee? How much money would you save, right? If you stop going to Kith Treats, for instance, right? If you went somewhere else besides enter your favorite salad or juice bar here, right? How much would you spend? That's recap. And then eventually discover, which is additional information on top of merchants not only that you've been to, but places that you haven't yet. Discovering new merchants in the greatest city on earth. What about that new spot that just opened up around the corner from you? What about that new coffee house that has fantastic coffee? It's well reviewed by all of your friends and you haven't checked it out yet, right? Now you can imagine, that's the consumer play. You can imagine a platform that not only has consumers using it, but also merchants on the other side. In the same way that LinkedIn connects professionals and companies looking for talented professionals, there's yet to be a platform that connects consumers and merchants looking for consumers, right? So let's go back to that coffee house or cocktail bar example, right? All of your friends have checked it out, and you're the laggard. You're behind. What if that cocktail bar, what if that coffee house could consume data to say, hey, you're the person who hasn't checked it out yet? They send you a discount. They send you a promotion. They send you something to get you in the door, hoping that they can convert you to a recurring customer. Right now, SMBs in New York, offline retailers, they cannot compete with online retail. They cannot. They don't have the data. They don't have the access to the customers. They can't communicate with us. Execs looking to not only change how consumers behave in the world that we live in, but merchants as well. This is the platform play. You can imagine all kinds of other features kind of built around that for the merchant-consumer relationship. This is how we're making money. Like I said, we are in the seed stage. We launched 7 weeks ago. If you are a current user, potential user, would love to talk to you. If you're an investor, we'd love to talk to you as well. You can download this from the App Store today. I'm Derek from Exec, and I'd love to take some questions now, I guess, right? Cool.
Do we have any questions for Derek? Well, folks are, yeah, go ahead.
Hi, I'm also a dad of 3, and I was wondering how can you separate household expenses from personal and business?
Yeah, that's a fantastic question. It's actually one of the top kind of questions that we get within our support system today. So right now, we are unable to do that. Just be upfront. But it is a public beta. We're going to be doing that, and we're working with our provider. We integrate with Plaid. They're great friends of ours. We're working very closely with Plaid on making that a reality. So you can tell from kind of the speed of execution in terms of new features, Android launch, that once we set our mind to resolving something, it's pretty quick. We've got a phenomenal team of engineers and product people from places like Jane Street, Tapad, et cetera, that are working on just that. So.
Yeah.
So I got a quick question, or it's actually not a quick question. My understanding is that a lot of the companies, Walmart, everybody, is instituting loyalty programs because they're trying to get this exact information. They want to know who I am, where I'm spending money. So now you've got it. The question is, what do I have to provide to you for you to be able to give me that? And then who are you giving that information to, if anybody?
What are you giving me as a consumer, as a user?
You need access to my bank account, my cards. Like, how do you get that information in there?
Yeah, so if you want to see your transactional information, you attach your bank account. You link your bank account, and then we work with thousands of banks in order to get that transactional data. We store it securely, anonymously, right? It's aggregated in our system, but anonymous and secure. We don't store it alongside PII, or personally identifiable information, right? That's completely a separate system, logically and physically separated on the data side. And then the social aspect, like we integrate with Facebook as well, right? So your friend, if you want to see where your friends are reacting, that's a Facebook item. You can connect one or the other, right? I want my Facebook information. I want to see where my friends are spending, but I'm not quite ready to connect my bank account. You can kind of use the platform in that way. You can also do the reverse. Connect your bank account, don't connect Facebook. Or you can connect neither, and you would see trending merchants within your area. But the ideal use case for the platform is actually to connect both. And then who are we selling that to, was the last part of your question? Yeah, we're not selling it to anyone right now. I mean, we're a seed stage, right? But the goal is to sell it to SMBs, right? small to medium-sized businesses in the local economy, because that's where we think that the most value for the consumer would come, right? Selling it to Walmart, like Walmart has tons of data. Target has tons of data. Starbucks has tons of data about us already. They don't need data that exec has, let's be honest, right? Our data exists outside in these large companies already. They're just looking for more sources of it. And so if I were all about the revenue and all about the money, I would stand here and say, yeah, we're going to sell it to them. We're going to sell it to WorldQuant. We're going to sell it to Renaissance and Citadel and all these others. But that's not doing the consumers or the SMBs any service. We are here, exec is here to serve both you, the consumer, and the small to medium-sized businesses that make cities like New York great, and they're being vastly underserved right now. Yep.
Hi. So I'm slightly older than you, but still I think a millennial if you're born in the 80s.
Yeah.
And I just downloaded the app. Good UI. I am a programmer myself, and I have programmers do mobile apps. Why do you ask for phone numbers? You're talking about knowing information. Why can't I just sign up with my email?
Yeah, that's a fantastic question. So the reason that we initially used phone number as authentication is that it's built in two-factor, right? Like we send you a text, and you have to have the device with you. And so it's like another layer of security. We are internally thinking through things around like how to implement two-factor authentication in a way that's consumer-friendly and things like that. But that's the way that we implemented it from day one. I'd love to talk with you after about other ideas that you may have, but it's a security issue for us.
All right.
Hi.
Last question.
Hi, I'm Maria Delbert. I've worked in the past on developing reporting insights for small business, and one of the things is really trying to understand when they need that data and how they need that data. Yeah. Is it more of a reporting concept, or are you thinking about services? Because sometimes information at the wrong time actually does them a disservice.
Yeah, no, you're totally right. So on the data side for merchants, there's kind of three phases that we're thinking around the B2B side, right? So the first phase is actually enabling direct communication from merchant to consumer for the first time, right? So I want to be able to target people who shop at my competitor. I want to be able to say, if you live in this geographic area and are spending between $15 and $20 on coffee, right? I want to be able to send you a discount, things like that. That's phase one. And so we're looking at that like half one of next year. And that's going to be the first revenue stream. Subsequent to that, it will be reporting. It will be data analysis, right? So we have a couple of people that we're working with here in New York that they're medium-sized businesses. They have multiple locations. They're brands that you would know and love. And we're working with them to see what their exact reporting needs are. Immediately off the top, it's things like competitive analysis, market share, right? So I own a spot in the Oculus. My competitor just opened up across the way, right? I want to see how many transactions are occurring there, right? Now, there's two ways I can get it. I could either purchase exec for businesses and be able to run my business in a much more efficient way, or I can go sit in their coffee house or whatever for 8 hours and customer count, right? And then do some rough head math. That's obviously an oversimplification, but that's kind of the phase two of things that we're thinking through is that reporting aspect. And it would be an on-demand service. So the timing, we're not going to send them a PDF via email. It would much more be like a freemium SaaS model that they would log in at the end of the month or whenever they wanted it. It would be on demand.
Okay. All right, thanks. We've got to.
Sure.
Thanks very much.
Thanks.
All right. Our last but not least speaker is Marie Week, who is the general manager of IBM Blockchain.
So I'm sorry, Derek, we're back to blockchain. But before we jump in that, I'm going to try to do a really quick flyby of some of the things that IBM is providing for fintechs in the space in terms of both business model and technical support. And in March, you may have seen, we announced the IBM Cloud for financial services. It is a fully integrated cloud that has infrastructure as well as platform as a service, in addition to bare metal capabilities if you want to do, high volume types of real-time transactions, also certified for financial services regulatory requirements, and includes a set of curated APIs that are all part of a marketplace for common sets of services, both from IBM and from third parties. And In that framework, we also provide a set of starter kits specifically for some of the things we've even talked about today. One of them is about insights with Watson and how to leverage the Watson Discovery Service, which allows you to ingest news feeds and articles and other documents and compare it to your financial portfolio. So what new news is breaking that might have an impact on your stock? Another good example with Watson that we are providing is the ability to use the conversation service with, again, a set of curated capabilities that allow you to create an automated chatbot so that you can provide financial advice or other elements that may have an indication. We also provide blockchain, but I'll get to that in a second. In addition to some of these already curated, here's the demo, here's the code, here's samples, here's how you can get started, we also have a full set in our development center, our marketplace, of a set of service capabilities. Some of the ones from IBM include the algo technology, which has capabilities for both historic and predictive financial forecasting based on 30 years of models, and allows you to stress test different portfolios with different scenarios. So you can plug all those in with different APIs and do a lot of what ifs. We also have third-party content in there, again, as a set of APIs you consume. You know, those of you who were in some of the brain date and saw Quavo had the opportunity to see their ability to integrate financial services data. They're one of the firms that has their APIs in the marketplace. And in terms of business models, we have the opportunity through the marketplace to either do revenue share per transaction models like an app store model or subscription-based. Some people buy things for those services on a monthly basis or a per user basis, how you can integrate those in terms of now having not only a developer center, but a channel. Now, one of the things we have as well is our blockchain capabilities on Hyperledger. And just to give you the quick run-by of what we're doing in blockchain, we are doing blockchain, like many, we started with Ethereum, but we moved off of that because of both performance and mining and licensing, and are now one of the 170 members in the Hyperledger project under the Linux Foundation. And we provide support if you want it on the direct open source, but we also take those projects, Hyperledger Fabric and Composer, and integrate them into a full lifecycle platform as a service that you can consume and use, and I'll show you a little bit about that. But on top of that, you know, blockchain is all about a network. So it's not the plumbing and the platform that you really care about, it's the use cases and the network and the members that you're bringing together. And we help companies build the applications that run those networks. We help onboard and connect network members or operate the network if somebody wants that done, especially in the case of a consortium. And we also invest in networks ourselves or our participants, especially around our own supply chain. But I liken most of these networks, you know, to a mall. They're typically the anchor tenants of that mall, and you may go to that mall for, you know, the sale in that anchor tenant, but you don't stay in the mall unless, you know, there's good services in the food court and the movie theater and the other value-added services that are provided by that network based on the data that's being shared. And that's where the ecosystem kicks in, and we're seeing a lot of opportunities for startups and fintechs to participate in those networks and be onboarded into the individual marketplaces of each. And we're interestingly seeing a bunch of different use cases on the kinds of networks that people are setting up. The ones that you see most in terms of the press are the consortiums with, whether it's a number of big banks like WeTrade around trade finance, or whether it's around food safety. They're getting together to create essentially a consortium. Some of them are loosely formed. Some of them are getting into joint ventures where they're actually creating a legal entity for it. But again, they are setting up a set of peers that are sharing. But not all the participants in a network need to be peers or need to run one of the distributed databases. And we definitely see places where there are founder-led networks. We have our own network around our IBM Global Financing where we're bringing our customers in order to reduce the time for dispute resolution by having all the smart contract data right on the blockchain. There isn't the notion of a model like a membership fee or a joint venture. You're bringing your own set of customers. You can do that yourselves. And in many cases, they don't even know they're on a blockchain network. They're just getting better service. And there's also emerging groups where there's already industry groups, whether those are standards bodies or whether those are folks that are connecting already on a network, whether it's a SWIFT network, whether it's an EDI network, and they're now having extensions with shadow chains for the data so they can share that information more directly. The business models tend to vary. Some are membership fees, some are transaction-based models, some you won't even know you're just getting a value add because it's reducing the cost of what it takes to deliver those goods in the first place. And when we think about that and actually get into it, so now I'm going to go a little bit deeper on a quick flyby of the network itself and the platform. So those of you who are technically oriented, you might like this. For those of you that aren't so interested in learning all about it, this is the time to check, whether you've got exec downloaded right and can get that going. But in the platform, there's 3 key things you have to do in the life cycle of a network. You have to develop the chain code, the app itself that's running on that network sharing data. You have to govern the network. Who are the members? How do they all communicate? What consensus do they provide? And you have to operate it. And when you get started, people need to learn about this. Blockchain has a whole set of dev center resources on education, from 5-minute quick things you can give your clients so they know what you're talking about, to badged related multi-day training. We also have an academic program that allows 1,000 universities free access to the platform and curriculum guides to learn that. But when they've now got some developer skills and start getting in to think about what they're going to do with their blockchain application, there are 3 ways you can get access to that. We have a free developer playground. If you think of the Swift playground or others, you can get on for free, or you can download for free a fully integrated developer environment in your own laptop system, wherever you want it. And you can share code samples on the cloud directly if you're working this jointly with others. Once you do that, then you need to think about activating the network to deploy the code and share it. And that's where Hyperledger Composer comes in. That's the project that is the tooling environment for Hyperledger. And it really tried to go from what's usually Go code into JavaScript. And we provide a free set of sample networks. So you download one of these networks. We actually picked a vehicle lifecycle network. So you've got a network with a bunch of assets and some smart contracts, and you can automatically load it into the tool. And it has all the things that the members need to care about. There are participants in a network. There are assets. There are transactions. And they constitute the smart contracts that you operate across these networks. And you can quickly fill them in, very text-based, a lot of light programming required. It's all in JavaScript. Anybody who's doing website development will know that. And you can take those, in this case, with cars being modeled to configure for purchase, to the insurer, to the participants in the motor vehicle group that would take those and extend them. And again, you can save that, you can test it, all in the integrated environment, don't have to download anything, all pretty straightforward. And when you're ready and done with that, then you've got it all integrated into the cloud. There is also the ability to share that code with your other network participants. So we have a built-in REST server that automatically produces automated APIs for the insurer, for the manufacturer, for the motor vehicle consumer, and the regulator, and allows you to automatically post those so that you can then use them in your front-end apps. Because again, most people using a blockchain don't really know they're using it. They've got a mobile app on their normal system, and then you go and take that code and deploy it to your network. Now, this is where it usually gets different, right? Because now you got multiple parties. We have a wizard that allows you to create a network. And it's a couple of steps. You name your network. You specify where it is. You go out and invite members. You can give them a list of emails and give them a description or a message on what they need to do and why. You can also start moving total groups and get organizational views. And once you've done it, you can then define what governance policy they have. Can they add more network members themselves, or do they have different rights? And you can see the status of your network automatically in terms of what that democratic voting process are. Have they joined? Is their status pending? Do you need to set them another notification? Is there some action needed? And Hyperledger has this notion of a channel as well, which lets you create subnetworks. So if you have competitors on your network and you don't want them to see all the data, each can have a subchannel. It shows you creating a new channel, and it only allows you to pick the folks that are in your network, but they won't all see it. And then they'll get a pending request for this subchannel. Think CB radio. I can only hear what's on channel 12, and there's my notification, and that's the only data that I can see. And once you've got your channels, your members, your network, your code, you can launch your car app that includes those APIs to have the consumer configure their car purchase, or the manufacturer to look at where the status of that particular car is, or the insurer on what the claim status is of warranty parts to that car with the manufacturer, or, as we've talked as well, the regulator, in this case, the motor vehicle, who will see every block on the chain. They usually are the ones that are not on a subchannel but get to look at it all. And if the use cases that we had already as samples aren't good, we also have a whole list of top use cases that are out there in each industry. And in the financial services space, the top use cases we've seen are trade finance, are security related to identity and KYC AML, are settlement and clearing, not the transaction itself, pre and post trade, and mortgage as another key use case, especially tying into title and how does the title process connect all these. And from a FinTech perspective, not only does the platform let you get up very quickly, and there's interoperability between all these networks, but joining these networks as an opportunity to provide those value-added services is a big potential and one that we've been focusing on. And in that, we have a specific partner ecosystem program where we're doing two things. One, we're helping those startups or fintechs that want to launch their own network. We're also working with other founders on a founder accelerator program and a handbook on best practices to get those networks connected and supported. And we're also trying to share, just like in the FinTech Hub, those value-added service providers that may connect the network of networks. So that's a really fast flyby on some of the top things that we're doing across the space. I hope that helps.
Thank you very much. So
Any last questions?
Yeah, we can have time for a couple questions. I actually have a question, which is, it doesn't seem like there's a cryptocurrency underlying IBM's blockchain. So how is it possible, and if so, how is it possible for a third party on the blockchain network to verify a transaction between other parties without having a unit of value in the form of a cryptocurrency?
So in Hyperledger, it is not a cryptocurrency-based or mined solution. It is a permissioned network, and it does use a Byzantine algorithm for consensus. So there is still consensus among the peers on when you post information onto the blockchain, but it does not use a cryptocurrency. We have done work, just announced a offering at Sybos on universal payments, working with ClickX and Stellar, where we're using a token value as a way to do cross-border exchange in the South Pacific, but it doesn't use a cryptocurrency directly.
Thanks. Question over there? Oh, sure.
Sorry.
Hi. My question is about the Watson insights that you were talking about. Now, as a retail investor, how do I have access to that? And can I like build my own portfolio and get insights? And what kind of insights would I expect?
Yes, you can get access off of the IBM Cloud to Watson, and there are a clear set of services. There are some samples out there with existing portfolios if you want to see how that works, but you can import, and there's a whole set of instructions, you can import your portfolio and provide that insight into it. So you can do a comparison. There's a couple of ways to do that. There's also the ways of getting at the algo forecasted data, which would say, do you want to apply Watson on a historical database? And you can see how that is done as well.
But do I have to, is that a freemium-based service, or do I have to pay for it?
It is a freemium-based service. There's a set of guidelines. There's usually, depending on where you are in our IBM Cloud, there's usually a 30-day free trial and a freemium on the individual services. And again, most of them start for free based on use cases. There's a clip level on API calls.
Okay. Thank you. My next question for you is about the network that you were talking about. Who do you see as one of your biggest competitors for building out the network? Because it's clearly not GCP and AWS. That's not what you're competing with over here.
I mean, I think it all depends by region and by type of network. So there are some focused players, R3 with Corda, that are working in financial services. There was mention earlier about the work that DAH is doing, which we're an investor in DAH and what they're doing with the stock exchanges. There are very specific applications as well, like Ripple. You know, so when you talk about the financial services space, there are some very discrete financial-based alternatives that are out there. We're trying to provide a generic cross-platform capability because we think the connection on those network of networks, where trade finance is used on top of a supply chain network, or insurance with IoT is used on top of a trading exchange, are values that further accelerate. It's kind of the network effect. So we're trying to connect the dots across those rather than individual specific use cases.
What financial regulators are using your platform, and for what business cases?
Financial regulators, we've had several. A good example is with Northern Trust did a private equity solution with the regulators in Guernsey to do limited partner connections through their investment platform. And the regulators were directly involved from the design of the network all the way through the pilots. And that's now being extended. We've done a lot of supply chain work that includes like work that we did with Maersk on global trade digitization with the ports of Rotterdam and the Customs and Border Patrol teams in terms of cross-border trade. There's also been work with a couple of the central banks and monetary authorities on the notion of a digital currency as opposed to cryptocurrencies, and we've been working with some of them as well.
Thank you. All right, that's all we have time for. Let's thank Marie and the panel.
Thank you.